Hello everyone and welcome to our monthly MBH board chats with our CEO Callum Laing. I'm your host Lisa Maynard-Atem. Hi Callum, how are you?
I'm very well, thank you, Lisa. Looking forward to today's call.
Me too. We've got quite a lot to get through actually in today's chat, including obviously the usual awards, focus on ESG, your thoughts in relation to a possible recession, EBIT contribution, the unwinding process, to name but a few. So let's kick things off. So I thought we could start with the official welcome of Vista Care following official regulatory approval for change of ownership. So I thought that's quite a nice one to kick things off.
Yeah, so just before we started recording, we were talking about how frustrating it is when you're doing lots of work and it takes a long time to see the results. And then, yeah, it's taken this long to get council approval for the change of ownership. But anyway, it's done. It's a fantastic company. I mean, really, really amazing company doing some incredible work. Providing domiciliary care and healthcare support, which is massively needed at the moment. So yeah, great to have Ali, who runs that business, is incredibly sharp and has built a fantastic business. So yeah, fantastic to finally have them officially in the group. Good.
Yeah, it's really exciting. Next up, as always, I think this is becoming a regular thing with all of our chats, awards. GS Contracts were recently awarded recognition for one of their latest projects, which, if I remember rightly, it's the kitchen at Martello in Felixstowe. So yeah, yet again, another award from one of our companies, which is fantastic.
Yeah, and as I say every month, like half the time, I don't think we even hear about them. Yeah, they just keep winning them. So, but yeah, no, it's great to have that recognition, and it does help with new client acquisitions and kind of getting the word out. So yeah, it's all great. Yeah, GS is a great old company as well.
Yeah, they're fantastic, and I really love their Instagram too. It's really good. Something else that I thought was really great that we could touch on from an ESG perspective is the Take Me Group switching their fleets to electric by 2029. Obviously, this is something that we're really passionate about, and obviously Victoria Sylvester has been really championing the whole ESG strategy. So I thought that was something we could talk about because it's a really fantastic thing.
Yeah, I mean, I could rant about this for a long time because I think there's a huge disconnect between the finance world and the way the finance world views ESG and the way small businesses view ESG. I think most small businesses have been working in this area, trying to do good in the world and in their communities for a long time. ESG is a relatively new concept in the finance world. And it's taking a long time to get most investors on board with it. But yeah, I mean, most of the companies in the group that we've got have been doing fantastic things in this space. I think the challenge for investors is how we communicate that and how we articulate it and quantify it. But yeah, look at electric cars. The technology has just developed so quickly. The guys bought a fleet of Teslas last year. It's been fantastic. It's it's a great car, great technology. But interestingly, again, while the finance world has been sort of a bit behind on this, companies like Pepsi in the UK stipulated that when they hire a taxi for their corporate like travel, it had to be initially hybrid. So they started that 9 years ago. Now it has to be electric. So a lot of people don't realize that when they look at the taxi business, they kind of assume it's just people hailing cabs or using an app to get a cab. But a huge part of the business is actually doing these B2B, these corporate accounts, and that's where a lot of the money is. And oftentimes that desire to make a positive impact and push towards electric vehicles is coming from that side as well. So yeah, no, good on the Take Me guys for stepping up and doing that. It's brilliant.
Yeah, it is really, really good. So there's a question I wanted to ask, because we've had this actually from quite a few people in terms of a possible recession. What precautions are being taken in the event that there could be a potential recession? Is a question that we've had quite a lot recently.
Yeah, I mean, interesting. I think we've had more questions from investors in the past month. We've got a few more to cover off today. So, I mean, that's great. Great that they're sort of understanding more about the business and asking questions about how we'll be impacted. From what I'm seeing, it's for recessions are always painted in the media as a recession, but economies are so incredibly diverse and complex that there are areas that have been in recession for probably 2 quarters already. There are areas that haven't yet gone into recession. From what I'm hearing and from what I'm seeing on the ground, the US seems to be getting hit quite hard. Now, fortunately, our exposure to the US is very minimal. But I mean, certainly there's a lot of different stuff going on at the moment. And I think that the advantage of working with small businesses is small businesses can react very quickly. So one of the things we are seeing is that it's much, much easier to get staff than 3, 4 months ago, 6 months ago. It was nearly impossible to get staff. Everyone was talking about the Great Resignation, which at the time I kind of joked would be followed by the great, oh, I've run out of money, I need a job. And that seems to be happening. And being combined with the fact that the cost of everything is going up. Now, the cost of everything is going up, and that's having a knock-on impact to everything. I mean, I was talking to one of our companies, the cost of cardboard boxes for their business has gone up 400% in the last 4 years. Talked to another company today, the cost of their raw materials has gone up 400% in 12 months. So they just recosted for a annual project that they do for a client, and the cost of their supplies has gone up 400% in 12 months. I mean, that's crazy. Now, I don't think, I don't think that can go on forever. I think it's going to be turbulent times. I think, again, we've got the advantage that we're spread across multiple different industries, and I think like any challenge, small businesses are always looking for the opportunities, it's probably the hardest hit in our economies will suffer the most, but I think most of our businesses are pretty in a pretty good place to weather it. But we'll see.
Okay. Another question that we've had is around EBIT contribution. So what happens when a company increases their EBIT contribution to the group above their previous mark?
Yeah, so this is a question around sort of how we incentivize founders. I think one of the big concerns that investors have is that business owners will sell their company to us, wash their hands of it, and walk away from the business. And that kind of misses the point of why we're doing what we're doing. We've built this to help small businesses to scale their businesses. So founders are joining us because they want to grow their businesses. They want that ongoing success and growth. But also founders are used to being incentivized by rewards for that growth. And so the way that we structure our deal is this almost kind of like perpetual earn-in model for business owners. So what we do is when a company comes in, that sets a benchmark or a high watermark of what their EBIT contribution to the group is. And then every time they go higher than that, they will get bonus shares based on a multiple of what the additional incremental profit contribution to the group is. That becomes their new high watermark. So no company can game the system by putting all of their expenses into 1 year and then trying to get bonuses the next year. They always have to get back above whatever their high watermark is. But yeah, it's an incredibly I think it's an incredibly meritocratic system. It means that companies that outperform end up with a bigger slice of the pie. It means that if a company plateaus or goes backwards for whatever reason, there's no penalty for that. But obviously they wouldn't earn additional shares that year, and that keeps our principals engaged and motivated. Most of the time, a lot of the time they will share those bonus shares with their teams as well. So it's something that the teams all are focused on EBIT contribution. So yeah, it's a very effective tool for us.
Okay. The next question I had was around the unwinding process. So can you explain a bit more about the unwinding process for companies that are joining MBH?
Yeah, so this is an innovation that we put in place, which I think I haven't seen another company doing this, and I think it's probably quite unique to us, but it's really about protecting all of our shareholders. So when we bring a company in, look, obviously when we bring a company in, we assume the best for that company. We think it's a good company. We think it's a great addition to the business. But we don't know for sure. And oftentimes what happens in M&A is people will, and there's many examples of this, they'll overpay for a company. They'll discover in the first year of their acquisition that it wasn't what they thought they were buying. There's all sorts of problems. They can't integrate. But by then the founder has cashed the check and is gone, as sold out. We don't do that. So when a company joins us, basically for that first year, it's almost like a probation year, and we reserve the right at MBH, and this is a one-way rights reservation to unwind the deal. So if the company fails to deliver 80% of its last year's EBIT, or we discover something over the course of that year that wasn't made apparent to us through due diligence and through the reps and warranties, we reserve the right to unwind that deal. And that basically means that there is no risk to our existing shareholders. We can basically give back their shares, we take our shares back, or our bonds back, and we carry on. And apart from some time, there's no hard cost. Now that's an incredibly powerful mechanism to protect shareholders, and it's a last resort. It's not something we would choose to do. I mean, if we bring a company in, they fail to meet 80% of last year's EBIT because there's a global pandemic, but they've been working hard, and we believe that long term they're a great addition to the company. Of course, we wouldn't call that clause. The only time we've ever done it was with a company called APEV. They joined us. They had a number of challenges that were actually caused by COVID and the supply chain with China. We felt sure that they would eventually get over them, but they had a lot to deal with. That they were still in their first year with us. They were dealing with joining a public company, and we just agreed mutually to enact that clause, unwind the business, let them go away and try and sort out what they needed to sort out. And then the door's open for them to come back to join us in the future if they do that. Now, if you imagine that had been a traditional acquisition where, for example, we had borrowed money from the bank, we had paid the founders for their shares, brought that company in, COVID hits, we suddenly realized that we're left with a business that isn't going to deliver on what we're expecting it to deliver. We have no recourse. In effect, we just end up with a company that wasn't as valuable as we thought and a huge amount of debt. But in this case, we just gave back the shares. They gave back their shares, and yeah, there was no harm, no foul to existing shareholders. So I think it's an incredibly powerful mechanism for protecting our shareholders, and it allows us to do deals with a level of confidence that yeah, most people wouldn't have in M&A.
Right, okay. The next thing I wanted to touch on was buybacks, because I've recalled in previous chats and outside of these chats as well, you've shared the view that you think buybacks are a short-term benefit. Can you give us some insight into why?
So it's not so much that I think it's a short-term benefit. It's the most common request from external shareholders. Principals aren't requesting this. It's definitely external shareholders, and the reason that I think it can be misused in the short term is shareholders obviously want the share price to go up. We all want the share price to go up. One way we could do that is take money out of all of the companies in the group and buy back a bunch of shares. Now that would restrict the growth of the companies in the group, but it would give us a temporary bump in the share price. So from that perspective, it's a short-term one for external shareholders who would then be able to sell their shares at a higher price. But in the meantime, you've got a whole bunch of small businesses that are trying to grow, trying to build for the future, who have now been starved of cash and are unable to do so. And so basically, I think share buybacks can be an incredibly powerful tool, and I'm sure we will use them in the future, but we will never do anything that's detrimental to the long-term health of the company just for short-term shareholder benefit, which is difficult for external investors to often get their heads around, because it's the exact opposite of the way Wall Street works, where you sacrifice long-term growth of the company for short-term benefits of the directors and the shareholders. You're constantly sacrificing long-term for the short-term. We don't want to change that dynamic. The companies that we acquire, the average age of those companies is more than 20 years old. They've got to that age of being multi-decade companies because they focus on the long term, and that gives them an opportunity. Hopefully these companies are still going to be spitting off dividends and cash to the group in another 10, 20 years. And the more we can support them now, the more they can grow and the more that they can pay in and ultimately create value for all shareholders. But it's, we very much think of this as business owners. Oftentimes the people that are calling for share buybacks are traders. What they're looking for is a short-term boost in the share price so they can sell out their shares at a higher price, and that's a trader mentality versus an owner mentality. And the shareholders that we've got that understand what we're doing and what we're building are much more aligned in terms of thinking as business owners. So yeah, but it's look, I'm sure it will still be the number one most requested thing that comes into my inbox every day.
So you have often said that you think companies will return to pre-COVID levels of revenue. Can you tell us why?
Yeah, look, I think so small business owners, by their very nature, entrepreneurs, we're always optimistic. We wouldn't get up otherwise. So look, I think all the businesses in the group are well established. They've been through downturns in the past. They've got through COVID. They're on a growth trajectory now. Look, I don't think every company in the group is going to get to pre-COVID levels, but I think the majority will, based on what they're seeing in the market right now. And look, none of us are very good at predicting the future. There's all sorts of things that can change that dynamic. But yeah, I think, look, I think we're in a very, very strong place. And I think one of the, kind of drawing on the earlier question about recession, we're buying these companies, we're bringing these companies into the group with a very long-term view. Now, if you contrast that with private equity that buys companies and has to make some cost savings, fires a bunch of staff, adds as much debt to the company as possible, and then needs to sell that company so that they can repay money to their LPs as quickly as possible, to their investors, their limited partners. When they buy a company that is in a cyclical market, they can get themselves into real trouble. And oftentimes private equity doesn't like buying companies that are cyclical, because if they are in a downturn and they have to get liquidity, so they have to get money back to their investors, then they end up having to sell those businesses at a loss. I don't have to worry about that. We don't have to worry about that, because we're not looking to flip these companies. These are long-term. It's a buy and hold strategy. We expect there to be dips and peaks and troughs, and so we can be a lot more relaxed about it. I've got don't tell anyone, but I've actually got friends in private equity and venture capital. And look, the venture capital guys are, they're having a torrid time, because for the last 4 years, they've been mocking me for having these old-fashioned profitable cash generating companies that nobody's interested in. They've been buying these software as a service, fast growth companies. They've been paying 100 times revenue. Some of these companies have been trading at 100 times revenue, not even earnings. Now, all of these, or a lot of these tech companies have dropped 60, 70, 80, 90% in the last three or 4 months. Now, the problem is they're never going to recover to those multiples. It could be decades before they get back up to those prices. That means that all of the staff that were incentivized with stock options are all below water. It means that they're going to have that, a lot of them are just not going to survive because they have been living at this level and suddenly they're down to this level. They've got a lot of companies in the US, a lot of tech companies are either hit hiring freezes or laying off staff already. And they're just not used to that. They've only ever lived in this milk and honey world of high valuations and tons of venture capital. They talk about what great cultures these companies have. Well, it's great. It's very easy to have a good company culture when you've got tens or hundreds of millions to spend on growth. When you suddenly get into a deflationary model, then nobody wants to work there anymore. It's miserable going through downturns. It's miserable seeing your colleagues be laid off. So it's going to be incredibly tough for those. And what's noticeable now is a lot of the investors that I've been talking to for many years are now looking at and they want to get involved with companies that are practical and undervalued and cash generating and reliable. So look, markets are cyclical and investors, we're all very silly, we tend to chase go too far one way and too far the other way. Look, the way you get around that is by having a long-term view, and that's basically the approach that we take. And I think the shareholders that we have, the external shareholders that we have, are the ones that understand that and do have that long-term view.
Okay. So as always, I always ask you this question, again, when we get towards the end of our chats, is there anything you can share with us in terms of acquisitions or any exciting MBH news? I know I ask you every single time, but I'm always in the hope that one day you'll give us a little snippet of something.
Yeah. So again, as we were touching on before, we're really busy. There's a lot of stuff going on behind the scenes. It's just I can't yet talk about it until the press release hits the wire. But there's some really interesting stuff coming. There's some really, really cool companies coming down the pipeline that got some very interesting stories. So hopefully on our next call, I'll be able to share a little bit more about those companies.
Well, I shall definitely be asking on our next call. But yeah, that's it for me in terms of questions. Anything that you'd like to talk about before we sign off?
No, just to say that we have had masses of questions from investors this month, and that's great to see. We've got our AGM coming up very soon, and we've got very good feedback from about the annual report from last year and everything that we've done. So lots of exciting things. So all good.
Oh, fantastic. Well, thank you very much, Callum. It's been great talking to you, and thank you to everyone who's joined us today. Don't forget that you should subscribe to our YouTube channel and join us next month for our next board chat. Thank you.
Awesome. Thanks, Lisa.
Find out more today at mbhcorporation.com.